Frank, it's great to be here, and thanks for having me back on the show.
Yeah.
It's been crazy out there as of late, and I would sort of look at yesterday's price action as sort of throwback Thursday from my perspective, Frank.
Throwback. Look at you, man, with the social media term. So I'm going to jump into what we saw yesterday. I actually want to get into your support levels for the S&P. You have support levels for the S&P at 4131 and 4060. Now, I did some back of the napkin math. If the S&P falls 2% today, we break through that to the downside. Now, I hate to be a negative thinker, but if we do go below that 2% mark and we break through those support levels, where do you see the markets heading after that?
Well, Frank, yes, those are very, very key levels to be watching in the market. And the reason that those are key levels are simplistically this. We're starting to see a larger number of stocks in the S&P 500 breaking below those February and March lows. And in fact, that is the key level as a technician that I really want to watch and pay attention to. Right now, about 35% of all the stocks in the S&P 500 have already broken those lows. And to answer your question of where do you go? Well, we've already seen the bond market move back toward the, February 2020 sort of pre-pandemic levels. We've seen the Russell getting pretty close to those levels. I'm not sure why we wouldn't see the S&P 500 get to those levels. So in the short term, in a washout type move in the market, which is kind of short term, what I would think could happen, you'd be back to those levels, which could put you another 15 to 20% lower from where you are right now.
Wow, Craig, you're getting a lot of people's Friday off to a rough start. So you're overweight on energy, materials, and also mega cap tech. Are there any specific areas that you're looking at? Because obviously all of tech's under a lot of pressure due to interest rates. We're even seeing a Microsoft down 4% yesterday, Apple down nearly 3.5% yesterday. So when you say mega cap tech, what exactly are you talking about?
Well, here's the challenge. When you look at this market, you have to be invested. And if you think about what's working inside of this market right now, it's really, as you said, energy, it's basic materials, and it's also utilities. But you start adding those parts of the entire market up, Frank, and you're literally talking about 12% of the entire market. So I don't think that's a realistic recommendation to investors out there. So we've gone overweight, as you said, energy, basic materials, but you got to have something out there. And even though you've got Microsoft down 4%, these are still some of the best companies in the world to own from a longer term perspective. And some of the longer term trends, when you go back and look at weekly charts, they're still intact. Okay. They may correct a little bit further in here, but you still need to have exposure to these larger cap tech names.
So it sounds like you're I hate to cut you off, but we're almost out of time. I want to ask you one more question. But it sounds like you're pretty bullish on FANG stocks still. Is that fair to say?
I think yes, that is fair to say. We need to have a place to put money to work. We need to have a place to hide. And I think those FANG stocks will be the place to be. But I also think you need to own some of these stocks like Occidental on the energy side, because you're reversing 10-year plus downtrends in those names, Frank.
Okay, one last thing. We're going to have to let you go in a second. You believe that investors, they actually slept on Powell's statement that the Fed is not, quote unquote, actively considering that 75-point hike in June. Of course, there was a rally at first, and then the next day, yesterday, we saw, the big sell-off. So just really quick, they got another night to sleep on it. What happens today? Are the markets still shaken up by that not actively considering?
I wouldn't be surprised to see a little bit of a relief rally in here today. But again, step back, look at the longer term weekly trend, Frank. It is still lower, and it's going to be just that, just a relief rally. So look for it to move higher and then be sold again.